Here we have 4 problems dealing with the weighted average contribution margin. The first problem, Halde Corporation, simply asks you to calculate the weighted average unit contribution margin for these 3 products, sleek, smooth, and potent. The next problem then gives you the sales mix and the contribution margin with the fixed costs and asks you to come up with the number of units that has to be sold in order to break even with that product mix. So you calculate the total break even in sales, and then you break it down by the sales mix for each one of those products. The third one has to deal with the contribution margin ratio, because here we're not talking about units, we're talking about 2 divisions, the accounting division and the tax division. Now, the sales revenue, 60% of the revenue is accounting related, 40% is tax. Contribution margin is calculated on each one of these, given to you, and the fixed costs are given to you. So they ask you to break even, and then they ask you for desired net income, $1,800,000. How much will they have to do in tax sales in order to achieve that target net income? Now the last product is a little more comprehensive. They don't give you the sales mix, but they give you the total sales of computers and VGS. So the total sales are $1,800,000 are computers, 200,000 VGS. So you must figure out the sales mix. Then secondly, they don't give you the contribution margin ratio here, so you must calculate that. So with the sales mix and the contribution margin ratio, they ask you to come up with a weighted average contribution margin, then the break-even point in total sales, and then the breakdown at that break-even point for computers and VG systems. So now these problems are in the resources. The template is there along with the solution. So download this and put it right into Excel and try it yourself, or download it and do it by hand. And practice the weighted average contribution margin ratio.